Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Welcome to Fun with Annuities. I am Stan the Annuity Man, America's annuity agent, licensed in all 50 states, including yours, and welcome to the podcast, the number one annuity podcast on the planet. Now, for those of you that are listening to this podcast, Fun with Annuities, on all of the major platforms, whether it's iTunes or Spotify or Stitch or whatever, you can also check it out on YouTube. We also film these as well, so I have a Fun with Annuities YouTube channel. Also have a Stan the Annuity Man YouTube channel with all kinds of informative videos, but if you want to watch this podcast, you certainly can. And a lot of people like it because I get all animated and I start, telling crazy stories, and they kind of get the feel of who I am. I am the top agent in the country. I've been doing the financial services business for a long, long time. I was with all the major firms, all the names you've ever heard. I'm not going to give them the promo now, but I was doing that for a long, long time. And then became Stan the Annuity Man a while back. Been doing this a while. And in that time period, I've written and published 7 books on annuities, of which I will send you for free and under no obligation if you go to theannuityman.com. Also, too, at my site, you can schedule a call with me. You want to do a one-on-one consultation, no charge. And it's not salesy. I'm just going to tell the truth. As my grandfather said, if you tell the truth, you don't have to remember anything. So you can do that. Schedule a call with me at the site. If you go to the homepage at the very top right-hand corner, you'll see a schedule a call link. One of the cool features on the site, theannuityman.com, is also you can run quotes. You can run your own quotes on SPIAs and DIAs and QLEX and all those types of products. By the way, those are immediate annuities, deferred income annuities, and qualified longevity annuity contracts. Enough about all that. Let's talk about today's topics, which is, are annuities better than life insurance? Is life insurance better than annuities? And how do they differ? And that's very important. It gets a little confusing, and let me kind of explain why. Annuities are issued by life insurance companies, but life insurance and annuities are completely separate animals from the standpoint of strategies and contractual guarantees and transfer of risk. Both life insurance and annuities, regardless of the type of annuity, are transfer of risk products. You're transferring the risk to the annuity company, the life insurance company, to do something specific. So let's talk about life insurance for a second. Disclaimer, I do not sell life insurance. I'm Stan the Annuity Man, not Stan the Life Insurance Man. So, but I love life insurance. I have millions and millions and millions of dollars on me personally. So if I just show up like randomly dead, then my wife shows up to the funeral in a Lamborghini, then you kind of can put 2 and 2 together. Or my daughter's helicopter in. I got 21 and 23-year-old daughters at the time of this taping. So, but I love life insurance. I always tell people life insurance is the best return on investment that you're never going to see because you're dead. Now, in the life insurance world currently, there's a lot of nonsense and products being sold that I think are very convoluted and too complex. To me, Stan the Annuity Man, Mr. Simplicity, making annuities simple. Let's make life insurance simple right now. When you buy life insurance, you buy the most death benefit that you can for the least amount of money. And in my world, that would be term life insurance or level term. And what level term means is that, let's just say you have a level term policy for 30 years. That means for those 30 years, that premium amount that you have to pay every year for the life insurance is never going to change. And that's what I do. And I like that. It's the most efficient. But boy, there's a lot of nonsense and sales pitches out there with life insurance. And we're going to get to that in a second. But, life insurance, one of the things you have to know about that is underwritten, meaning that well, 99% of the big policies, if you really want to take out a big policy on yourself, you got to go through the underwriting process, meaning blood tests and medical tests and nurse showing up and all that stuff. And that's fine if you're going to get, big numbers behind. There are some guaranteed issue or simple issue type life insurance policies, but they're for really, really low numbers. So when we're talking about underwriting, we're talking about if you want 100,000, 200,000, a million, 2 million on you, life insurance, you got to go through the underwriting process. And that can be a pain. And that's a lot of people don't have life insurance because they can't qualify. I always say annuity companies have the big buildings for reasons. Life insurance companies, which are annuity companies, have the big buildings for a reason. In the life insurance world, they want to insure young, healthy people, right? So if you're older, it's going to cost you more. If you have some health issues, it's going to cost you more, and you might not even qualify. But from a legacy standpoint, just pure legacy, leaving money to your beneficiaries, there is absolutely nothing that compares to life insurance, because when you die, that death benefit goes lump sum, tax-free, probate-free to the listed beneficiaries of the policy. If you ever wondered why you live in a neighborhood and some complete idiot has this big house and driving the car and acts like he's successful, it's probably because his dad or mom had a really good life insurance policy. I digress. I'm kidding. But there are a lot of people out there that are getting these lump sum life insurance policies, which is fantastic. My daughters will be playing that role, because when my Learjet hits the mountain, and no, I do not have a Learjet, but that's a saying I use. When my Learjet hits that mountain and I die, the life insurance tax-free lump sum is going to come to my daughters and my wife. They'll never have to work another day of their life. I believe in it that much, but I do not sell it. I have to focus and stay in my lane on annuities. And if you want to buy life insurance, if you're buying level term, like the really simplistic, pro-consumer, stripped out cost, I think the best policies, in my opinion, for consumers, the internet is just full of all of that. You can find those people everywhere, and it's competitive. Like annuities, life insurance is a commodity quote. You have to shop all carriers for the highest contractual guarantee, or in essence, the highest death benefit for the least amount of money. So that's life insurance in a nutshell. Now, annuities are a whole different animal. Now, annuities are for when you're living. These are life benefits. But let's just look at it from a legacy standpoint. Even though life insurance companies issue annuities, and let's just say you bought an annuity for a death benefit. You couldn't qualify for the underwriting or life insurance, and you bought an annuity for the death benefit. That death benefit is taxable to your beneficiaries, whereas a life insurance death benefit goes tax-free. That is a huge difference. But when you're buying annuities, it really comes down to two questions. I'm going to repeat them again. If you've heard them again and you're slapping your head, I'm sorry, but we have to drive the point home for the first-time listeners. By the way, welcome. The two questions are, what do you want the money to contractually do, and when do you want those contractual guarantees to start? From those two answers, I can determine if A, you need an annuity, and you might not, because if you answered market growth, you don't need an annuity. And then, B, if you do say qualify for annuity, or I think it's appropriate and suitable for us to look at annuities, then the answers to those two questions will then point me to the right product type. And when people say the word annuity, it's not all encompassing. There's many types of annuities that do different things. So if you said, for instance, answer the question, Stan, I don't want to lose any money and I want a guaranteed interest rate. Well, that's a multi-year guarantee annuity, which is the annuity industry version of a CD. If you said, Stan, I want lifetime income, and the second part of the question is, I want that income to start immediately, then that's a single premium immediate annuity. See what I'm doing? What do you want the money to contractually do? When do you want those contractual guarantees to start? The other thing that I help people determine if they need an annuity is the acronym I've come up with called PILL, P-I-L-L. P stands for principal protection, I stands for income for life, L stands for legacy, and the other L stands for long-term care confinement care. I'll do it again. P stands for principal protection, I stands for income for life, L stands for legacy, and the other L stands for long-term care confinement care. Now, there is an L there for legacy, but let's be very clear once again. Let me clarify. Life insurance is the best legacy product on the planet, period, end of story. Nobody can argue, because it's a tax-free lump sum benefit that goes to your listed beneficiaries of the policy. You talk about people loving you after you're dead, I guess that's when my kids are probably going to go, you know what? He was really not a bad father. Yeah, as they're swimming in millions of my life insurance death benefit. But I think they'll have good intentions, right? Maybe. I don't know. They're 21 and 23. I mean, do they have is their brain formed yet? But the point is, on the annuity side, is you're trying to solve for those four things. If you say, I want market growth, you don't need an annuity. But the reason the L for legacy is in that pill, PILL for annuities, is some people cannot qualify for life insurance. They can't pass the underwriting. They're smoking 12 packs of cigarettes a day and drinking a bottle of Jack Daniels and guzzling CBD oil, whatever they're doing, right? And they can't qualify. And if you can't qualify, then there are some annuities that have attached death benefit riders that anybody can get. Guaranteed issue, okay? But it's not as good as life insurance. Let's just be clear about that. One of the things in the life insurance business that's kind of bothering me right now is there's a lot of agents that are selling life insurance for other reasons than what it was put on the planet for. It's put on the planet for death benefit, tax-free, lump sum death benefit. But you'll hear a lot of agents out there pushing index growth inside of the policy or cash value inside of the policy. And then they have the audacity, the complete audacity to say you can get tax-free. Now, when I say this, just calm down because I'm going to explain it's not true. Okay. They're going to say you can get tax-free income from a life insurance policy. Well, first of all, that's garbage because there is no such thing. What you're doing is you're taking a loan from the policy to access that cash value. But loans aren't tax-free income. When you go to the bank and you get a loan, you don't consider that tax-free income. You consider it a loan. So they're playing some semantics, some word games. And I'm not saying all those policies are horrific. There are sometimes those policies do work when you're solving for specific things. There are some long-term care type policies life insurance policies that might be worth looking at. But you really should buy life insurance for the tax-free death benefit. I mean, it's just really that simple. Now, there are some ways that life insurance and annuities can work together. And I'll give you an example. I got a call the other day, and the guy says, my wife doesn't care about investments, and he's this guru. He's following the stocks and got multiple screens. And he's like, you know what? I'm going to buy a life insurance policy, Stan, but I want to buy an immediate annuity that will pay the premium every year. So I said, great, that's fantastic. That works. That's kind of an arbitrage leverage situation. So what I told him to do was get the term level term policy, get the quote, and then get the death benefit that you want, and then tell me exactly to the penny how much annual premium it will take to keep that policy up. So here's what we did. So he came up with something. It was a gargantuan policy. His wife's going to love him. She's going to Learjet into the funeral and Learjet out in a fur coat. I mean, this was a big policy, but it was big. Let's just say it was $25,000 a year. It was something in that range to fund that life insurance policy. So what I told him is, we're going to do a life-only policy, single premium immediate annuity. And by the way, single premium immediate annuities were put on the planet in the Roman times to pay a pension payment to the dutiful Roman soldiers and their families. That's where immediate annuities came from. And to this day, I mean, they've been sold in this country, United States, for hundreds of years and pretty much the same product. But going back to this example, so, we're solving for the $25,000 a year. I said, let's do a life-only policy. Of course, he's like, what are you told? Why not? Why life only? Because you're funding the life insurance policy. So, when you die, the immediate annuity stops and the life insurance policy pays to the wife. It's the most efficient way to do it. So he came to me and said, okay, that sounds good. I'll probably do it. He ended up doing that, by the way, but he wanted to know other angles. And I said, okay, you could do this. You could do a joint life policy with your wife, solving for that premium, that $25,000, that's paying, the life insurance premium every single year. But here's the fun part about doing it like that. If you set up joint life like that with your wife, so you're paying the premium to the life insurance policy, and when you die, the annuity payments continue because it's set up joint life with your wife. It continues for the rest of her life, and she gets the lump sum death benefit from life insurance policy. Hello, I have a lot of people doing that, that are trying to solve for that life insurance amount. And it's a good way to arbitrage the one policy against the other. You're using the SPIA policy, the immediate annuity policy, to pay the life insurance premium. And you can set up life only just on you, or you can set it up joint life only on you and the spouse. And bottom line is we can structure it a myriad of ways. But what I want you to primarily come away from this podcast is understanding kind of the basic differences from life insurance and annuities. And people say, which one's better, Stan? The annuity man, America's annuity agent? No good answer, just bad sales pitches, as I always say. It depends on what you're trying to solve for. If your goal is pure legacy, leaving money to the beneficiaries, leaving money to the family, leaving money to a charity, leaving money and leaving that legacy, then life insurance, if you can qualify medically for it, if you can get underwritten and approved and afford the premium, life insurance is the best way to do it. And in my opinion, it's level term life insurance, which allows you to buy the most death benefit for the least amount of money. And just like with annuities, we try to use the least amount of money to solve for the contractual goal. So both of them are similar in that standpoint, the way that I approach them. But with annuities, most people are using annuities today for either two primary things. I mean, the legacy part, if they can't qualify for life insurance, and then long-term care, confinement care, that's a secondary type coverage play. Same thing goes with long-term care. If you can't qualify for traditional long-term care, which is the best coverage, then annuities can provide a guaranteed issue or simplified issue coverage for long-term care. But the primary two things of that pill, the P and the I, it's the P and the I of the pill, not the L and the L. The legacy and the long-term care are secondary strategies if you can't qualify for traditional life insurance or traditional long-term care. But the primary reasons people use annuities for principal protection, okay, let's cover those products. Primarily, multi-year guarantee annuities, which is the annuity industry's version of a CD, okay, and fixed index annuities, which, by the way, are not market growth products, even though they're sold like that. These are CD products regulated at the state level. They're not securities. They're life insurance products. So if you want to protect the principal, you can. And you can get an interest rate attached to it, which is great. And index annuities allow you to do some other things like attach income riders for future income, things like that, attach riders for specific benefits. But the primary reason people use annuities, and the primary reason they're put on the planet, like I said about the Roman times, is for lifetime income. The word annuity comes from the Latin word annua, A-N-N-U-A, and no, I didn't go to take Latin in college, as you can tell, or high school. But that means payment or annual payment. And so that is the root word for annuity. And annuities are the only product on the planet that can provide a lifetime income stream and pay regardless of how long you live. Life insurance also has a very unique monopoly. And what is that again? A tax-free lump sum death benefit that passes outside of probate. No other product does that. Period. End of story. And no other product pays a lifetime income guarantee like annuities. So right now, at the time of this taping, there are over 10,000 people every single day that turn 65 years old. You say, wait a minute, Stan, what does that have to do with anything? What does that have to do with what we're talking about today? Well, what it has to do with is people that turn 65 are kind of going into chapter 2 of their lives, and they want more guarantees. They want more lifetime income. They want more principal protection. They don't want as much of the stock market volatility as they once desired. I mean, that's just the bottom line. Understand, though, with annuities and lifetime income payments, the primary pricing mechanism is life expectancy, or life expectancies at the time you take the payments. Interest rates play a secondary role. Now, if we had Jimmy Carter interest rates, would the payments be higher? Yes, but there's an argument right now at the time of this taping that interest rates might go lower. I mean, when the government's printing money like they're printing money, I don't expect them to raise interest rates on themselves. It'd be like me and you having a mortgage and going, you know what? Let's raise the mortgage rate just to be fair. No, they're not. They're probably not going to do that. So I always tell people you can't time rates at all. Now, with life insurance, the underwriting can be depending on the carrier. Some carriers will underwrite people that smoke, or if you want life insurance and you're willing to pay the premium to get that death benefit, there are carriers out there that can probably underwrite your policy. You might not be thrilled with the payment, but you have to look at it a little differently. I don't really look at either life insurance or annuities as investments. I look at them as contracts. Are you happy with the contractual guarantee of the policy and the transfer of risk? Yes, early in the podcast, I said that, life insurance is the best return on investment you'll ever see. That is true, when you run the number. I always tell people, have someone stand up at the funeral right in front of your casket and go, well, Jim put in X amount in the life insurance policy and just paid out this, was the ROI was this, so it's pretty good. And I always tell people there's no ROI until you die, right? So, but understand that you're going to hear all kinds of convoluted, complex sales pitches on both the annuity side and the life insurance side. One of the things that I think is the same about life insurance and annuities is you should take a simplistic approach to buying both. If you can't explain it to a 9-year-old, no offense to 9-year-olds, you shouldn't buy it. It has to be simple. And if it takes the agent or advisor, 2 or 3 meetings to try to explain the annuity or the life insurance policy they're trying to sell you, it might be a little bit too complicated, okay? Or it might have too much in fees, etc. You have to be very wary of it. And for both policies, if someone's pitching you something and it sounds too good to be true, whether it's life insurance and annuities, it is every single time, okay? It just is. These are contracts, and you buy them for the contractual guarantees of the policy. I always joke that, this is the annuity fun cam and you're in the will do, not might do studios. Will do means contractual guarantees. Might do is all that hypothetical, theoretical, projected, back-tested, hopeful, unicorns chasing the butterflies, agent scenario returns that they show you and you go, look, if you'd have owned it then, you'd have made this. Yeah, great. If I'd have dieted for the last 10 years, I wouldn't be fat or whatever, right? If I'd have exercised more, I wouldn't have health issues. I mean, you can't look back at policies like that and make decisions. And I think if you come away with one thing about this topic, which is, is life insurance better than annuities? Are annuities better than life insurance? How do they differ? Is just understand this. There is no best annuity. There is no best life insurance policy. You have to buy both product types like you buy a plane ticket. You have to shop all carriers. You have to put in the exact parameters that you want to happen, the exact contractual structure you want to happen. You shop all carriers and you find the best deal, the best contractual guarantee for your specific situation. And it's a fluid quotation market where, quotes change. So, this week or this month, there might be a guarantee that you like, and it might be completely different the next month. You have to understand that. Now, I always tell people, and I laugh all the time about, people say, well, you always say annuity companies have the big buildings for a reason. It really is true. And the main reason is, well, there's 2 main reasons. But the first reason is they don't give anything away. Okay, people that think that annuity companies give upfront bonuses or, they're not giving anything away. They're pricing it in. Trust me, there's no philanthropist at annuity companies. I mean, it's just not that way. So you have to be real careful about falling for the sales pitch and those type of things. So I think that's about it. I mean, to me, they work well when you fully understand the policy. Oh, I know what I was going to tell you. Anytime that you want to buy a life insurance policy or an annuity policy of any type, and remember, when you say the word annuity, there's many types of annuity policies. Remember, there's single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, index annuities, variable annuities, multi-year guarantee annuities, charitable gift annuities, blah. There's many types of annuities. Same thing with the life insurance. There's all types of life insurance policies, even though I think you should strip it down. But the bottom line with all of this, buy simplicity. Don't buy complexity. if you really can't explain it to your spouse or partner or your beneficiaries or your kids or your friends or even back to the agent, doggone it, don't buy it. And I know that flies in the face of a lot of the stuff you hear, and don't accept that 30,000-foot sales pitch that just sounds really good and neat and tied up in a little bow. No, don't do that. So let's conclude by going over the kind of the differences and the positives about life insurance. Life insurance, annuities are issued by life insurance companies. Life insurance death benefits are tax-free, whereas annuity death benefits are taxable. Life insurance is primarily an underwritten product when you're going for the large death benefit, and annuities are guaranteed issue. In 99% of the cases, there's a couple of annuities that can be underwritten, but they're a tiny part of the market. So one's guaranteed issue, one you've got to go through the underwriting process. Doesn't make one better than the other. You can also use them together, like I described in the story where the gentleman purchased the immediate annuity to pay the premium for the life insurance policy. Bottom line is, do you need to transfer risk? Only you can answer that, right? I mean, do you want to transfer risk? If you want to shoulder the risk and stay in the markets, stay in the markets. Why wouldn't you do that? I mean, but for life insurance, shop all carriers. If you want to buy it, I just type into the Google search bar level term insurance quotes, bing, and it'll light up like crazy. And if you want to get quotes from all product types from me, you can go to theannuityman.com and run quotes yourself. You can go, we have an immediate annuity calculator, qualified longevity annuity calculator, deferred income annuity calculator. You can request indexed annuity and income rider quotes, which we run and turn in less than 24 hours. We'll get it to you. And then there's a live feed of the best MYGA fixed rates, multi-year guarantee annuity fixed rates on the planet. So also remember that in addition to this Fun with Annuities YouTube channel, I do have a YouTube channel called Stan the Annuity Man. And there are, I think there's at the time of this taping, I think there's over 300 educational videos, typically 5 to 10 minutes long, that I tell the brutal truth and brutal facts about annuities. I mean, people kid me all the time because I call myself the walking middle finger of annuity truth. And I don't mean that in a negative way. I mean that I'm going to be brutal. And if you deal with me, if you choose it to become a client of ours, I'm going to be brutally honest with you and brutally truthful. I'm going to tell you if you don't need an annuity. I'm going to tell you if you're putting too much money in an annuity. I'm going to tell you if you're doing the wrong thing. I'm going to tell you if you're falling for someone's sales pitch. But you know what? That's what you need. I'm not going to be your friend. I'm going to be the best darn advisor you've ever had in your life, period. So with that, let's close it up. My name is Stan the Annuity Man. You have been listening to the #1 annuity podcast on the planet, and it just happens to be called Fun with Annuities. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MYGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 Annuity Owner's Manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.